Tyson Foods, maker of the famous Tyson chicken nuggies, is the stock we are analyzing today. The company has had a rough few quarters. It is down a lot. And so I thought now is the perfect time to review the company and see if it's worth adding to a position or adding to your portfolio for the first time. For anybody who doesn't know about Tyson Foods, they are a protein company that focuses in the chicken, pork, beef, and prepared food markets. They are the largest brand in the United States by pound share. They control 31.8% of the market, and their brand strength in specific segments such as frozen nuggets, frozen strips, breakfast sandwiches, lunch meat, hot dogs, and others is hands down number one in the entire country. For example, we can see on the far right that their frozen nugget segment controls 44% of the American market compared to 9% for the next closest competitor. As a quick overview of this waterfall chart shows, in the middle, Tyson is not doing too well. From Q4 2022 to Q4 2023, they are down by almost 75% in adjusted operating income. On the right-hand side, we can see a mild positive in that the fourth quarter of 2023 was about twice as good on an earnings basis as the third quarter of 2023, meaning there might be a turnaround for this company starting to show. As a result, the company has released its 2024 top priorities, which number one is focusing on capital expenditure and working capital. Tyson knows that it cannot control the price of chicken or beef on the free market, but it can't control the costs that it spends. So it is closing factories and laying off workers in order to save on its bottom line. They're also working to optimize their manufacturing footprint so that it is more efficient in the future, and they're hoping to restore performance in their chicken segment, which is their largest segment, as well as continue their growth and strength in their prepared food segments. In pork, they're really just trying to be more efficient, and in beef, Tyson is really just trying to survive right now. But they may have to sustain more losses in the short term, especially in that beef category. Wall Street was generally spooked by Tyson's recent earnings reports, leading to the stock being 2.3% lower in early Monday trading. This is despite a beat in earnings per share of 37 cents compared to the analysts' expectations of, I believe, something like 21 cents. But revenue did drop 2.8% from a year ago to $13.3 billion, which was below forecasts. Sales in their beef, pork, and chicken all fell, with beef volumes slumping by over 6% and pork being down about 0.2%. Chicken volumes were up by 1.7%, but that was offset by price declines. And the part that I think spooked investors the most was that Tyson guided for its 2024 revenue to be at the same as 2023, or about $52.9 billion. This was $1.5 billion less than originally expected. But in good news for the company, they are anticipating a rebound in demand for its chicken and pork products, and they are seeing, quote, tangible benefits of their actions focused on what they can control, which is capital spending or capital expenditure. What is good news for companies but bad news for workers is that 8 plants have been closed down and thousands of workers have been laid off during this year in order to cut those costs. It's not something you like to hear, but hopefully management has a plan. It does seem to suggest that the market is turning around, especially for their largest product categories, but it is too early to tell yet whether or not Tyson has truly hit a bottom. So now we're going to hop into the financial numbers, but before we do that really quickly, please like this video and subscribe to my channel. It would mean a ton to me. My hope is that we can continue to grow our community so we can talk about the markets and help others learn how to analyze companies in a safe, effective, and hype-free manner. Thank you so much for your view, and with that, let's get into it. Revenue growth hasn't been too bad, up over 7% per year for the last 5 years, but we are seeing a stagnation from 2022 to the trailing 12 months, and now through 2024, the company expects the revenue to be flat, which is never good to see, especially with inflation being as high as it is. EBITDA, which is a good measurement of the company's profitability before taxes, interest, etc., is down quite a bit and is currently sitting below even 2018 levels. Operating earnings have also taken a massive hit, falling from almost $9 in 2022 to $1.23 per share in the trailing 12 months. Gross margins have been cut in half, operating margins have been cut into a third, and somehow return on assets are even worse, being about 1/10 of where they were just a year ago. What I will say is that Tyson is generally a pretty shareholder-friendly company. They have been buying back their shares at about 1% per year, and those buybacks have increased a little bit in the last 12 months due to the stock's price coming down so much. My only hope, though, is that the company and its management continue to focus on being operationally efficient over just buying back shares. I would like to see that money used in more effective ways, especially given how rough the last about 6 or 9 months have been for Tyson. Cash has been very variable, ranging from $2.5 billion in 2021 to as low as $270 million in 2018. It currently sits at $706 million, which is a decent buffer for the company, but of course I would like to see that number as high as can feasibly possibly be. It would be very interesting to watch this trend in the future to see if the company is continuing to draw on its cash or if it's able to stabilize its current cash at or around that $700 million number. Tyson has generally handled long-term debt very well. It's below its 2020 peak. And the company is committed to making sure that its leverage ratios go down in the future. So I do believe this number should continue to come down, if not in a straight line, at least in a general downward trend. Net interest expenses also peaked in 2020, which is a good sign to me. It shows that even through 2020 and 2021, when rates were incredibly low, Tyson was taking out very low interest debt, which gives me hope that the company can and should be able to weather any financial storm that might continue to come its way as its products struggle. Levered free cash flow is not looking good at all. The company as recently as 2021 had $3 billion in free cash flow. And while Tyson is a cyclical company, its current cash flow of negative $144 million just does not sit well with me or investors in Wall Street. The company's free cash flow per share has also fallen quite substantially from $7.37 at its peak in 2020 down to 28 cents in the trailing 12 months. What's worse is that there are no expectations for this number to get any better in the next year or so. And so checking out the value chart, we can see the major drop that has occurred in the last 12 months has really affected Tyson's price. In 2022, the company traded as high as $95 to $98 a share. Today, it sits at about $45 a share. Due to its major drop in earnings, the company's current PE is 38.17, meaning that at a fair value PE of 15, this company is only worth $18.45 per share. Now, generally with these companies that are having major struggles, they do turn around very quickly. And so often they will not meet their fair value because the company turns around in 2 or 3 years and then earnings are back up at much more normal levels rather than the depressed levels that it's currently sitting at. With that said, Tyson's historical growth has averaged 10.5% per year, which would mean that by 2026, the company stock would only be worth about $25 per share. If we assume that Tyson is able to turn around its company in relatively short order, I could see the next, especially like 2 or 3 years, growing at maybe closer to 30% per year. And in that case, we can see that by 2026, Tyson Chicken is worth about $40 per share. That would suggest that Tyson's price today is still approximately 10% overvalued on a 2026 earnings basis. Now, of course, these are just projections, and my projections are assuming linear growth and are meant more just to give you an idea of what people are saying and expecting for the company and what is potentially possible. Tyson could turn around much faster, or it could not turn around at all. So take these future numbers with a very large grain of salt. So what I like about Tyson is that it's a brand leader and it is exceptionally strong in its core markets, especially chicken. It's also growing very fast in its packaged foods brands, so I think there's great potential for growth there. The company is also highly focused on cutting costs, and it's doing so at a significant pace, and I do think that'll help Tyson weather this economic downturn and the fallout that this slowdown in protein prices has caused. And 3, I like the signs of this potential improvement around the corner. Their chicken segment, which is their largest segment, improved sequentially. Their pork segment appears to be sitting around break even, and that's where they expect it to be. And of course, their prepared and packaged food segment is continuing to grow. So there are signs that the company could be in a bottoming process, at least for its financial underlying numbers. Now, what I do not like is that the company has yet to find a bottom. And by this, I mean both in its actual financial numbers with its chicken and pork and beef segments, their big main protein segments. All of them appear to be bottoming, but there is no guarantee that there's a bottom. This could have just been a small blip. That goes doubly true for its stock price, which has fallen like a rock over the last couple of quarters. I think it's pretty telling that the stock did not plummet as it has in the last couple of earnings reports, but by no means has Tyson's stock found a bottom in the current market. Also, I really don't like that there's negative free cash flow now and into the future. I do think the company can turn it around in the next 2 or 3 years, but it's never good to see a company not making free cash, especially when it's an established brand like Tyson that isn't growing at 30, 40, 50% per year. So that would be priority number 1 for me, is to see that free cash coming back into the positive territory and then expanding back towards normal levels. And 3rd, speaking of growth, with flat revenue expected, that really is just a sign of more issues to come, in my opinion, for Tyson. They are cutting costs, which is great. That could improve the bottom line. But if you're not growing sales and your revenues aren't growing, there's only so much that cutting costs can do. And so I think especially with inflation being slightly elevated, this flat revenue growth looks really bad on the company. And I would like to see revenue growth return, even if it's to the sequential 2% or something very small like that. So for my final thoughts, full disclosure, I do own Tyson stock currently. I bought it relatively recently, but I am down a pretty substantial amount on that position due to the company's weakness. And from everything I've seen right now, I'm not convinced that now is the time to either buy into a new position or add to my personal position. I do think that for me personally, the company still just hasn't shown enough improvement to really make me feel confident that the turnaround is, around the corner. I think that 10 or 15 or 20 years out, now is a great time to buy the company in general, but I do think that it would be prudent to kind of watch how the stock is reacting and maybe see how the next quarter's earnings look before you want to make any major investment in the company. That's just my 2 cents. You're free to do whatever you like. Of course, this is not financial advice. But with that, I would love to know your thoughts on the company. Do you like Tyson products? Do you like Tyson stock? And most importantly, do you like the powerful feeling of smashing that like button? Let me know in the comment section below. And with that, I hope you guys have a great day. Bye.